Hello everyone, Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino, going through your weekly sector overview. A number of sectors are tipping into sell mode again this week. So those are things we don't necessarily want to own stocks in unless it's for a very short bounce play. Now do keep in mind, we're showing about a 80%, low 80% chance that there will probably be a short-term bounce this week. And you have the Fed meeting coming up on Wednesday. So that could correspond nicely. So we are watching for a short-term bounce plays. And so if it's going to be in a stock that's in a sector that's already tipped into sell mode, I want it to be a stronger stock. And that is not something I'm looking to invest in for the long term. It will be to take advantage of a bounce play. And remember, in these markets that are rolling over pretty heavily, we can see still some rip your face off rallies, especially with negative gamma. So please keep that in mind. By the way, if this content does help you, please consider subscribing, ringing that bell, and hitting the like button. Longer term subscribers, please come back, like the video, and leave some comments. All right. So let's get straight to it. XLE, the energy sector, we've had a little pullback, but it's still in strong bullish mode. Now, we still do have a potential double top that is in play. What would that mean? That would mean I would get more picky if this did trigger, and that would be on a closing basis below 73.88. I would get more picky in my energy stocks, because some could potentially roll over even bigger, or I would not be aggressive with some of the plays and or up stop levels on things already in the money. So keep that in mind. But until that happens, we are still in bullish mode. And even if we do trigger this little double top pattern on that weekly basis, we could easily come back down to these levels without triggering a long-term sell signal. On the daily chart, you can see it's a little sloppier, coming back down below the 50, but then rolling, trying to go over. I'll start to get short-term a little hesitant on energy if it gets below 74 on a closing basis again, and then I'll really focus on the 70-32 area. XLRE, the real estate sector, is still coming back to this key areas, 37.5. If I reverse this, actually, let me reverse this real quick because you'll start to see something here. For the longer term people, this is right at the 62.5% retracement also of this up move. So I'm going to keep a real clear eye on this. I am not doing anything, even though it's still technically in buy mode. I'm really hesitant in the real estate area right now unless we get a substantial bounce off the 62.5. Because we start getting below here, even if we don't trigger the longer term sell signal, we could easily see a retest of this 44 area. Okay, it's based off the statistical work we do. And you see here, this was a big reversal bar on Friday, back below the 200. Coming off a divergence top and just collapsing down. Now, we do have some cycles in a lower position, but even on a bounce, I'm still going to be very hesitant unless it can get above about 47.65 on a closing basis. And then I might take a little stronger look back in something real estate related. Xlf Financial Sector triggered, it triggered a sell signal. It's in sell mode. So now it's just, if we do get a little bounce play, again, anything in the financial sectors, I'd have to be really picky with. Okay, it is getting oversold. We are getting towards, you can see here on the daily, some cycles trying to start turn up. There might be some aggressive plays, but it's against the daily rotation zone, and you have major overhead resistance about 35.50 to 36 area. So I'd be watching for any bounce plays to be up in this area and then roll over again. So just be very careful in the financial sector. Not saying we can't have a rally, but it's in long-term sell mode. So these rallies are short-lived and could turn into a bigger rollover move. Also, we could get into much more of a clear path move without a lot of stopping points. The next major stopping point here is all the way down on the sector back at about 31.20. So there is substantially, even on a bounce play and a rollover move, a fair amount more of this could fall really easily. And on a long-term basis, we could even below that see a return to this 50% level if we go into a pretty severe bear market. So do keep that in mind, please. That is not a sector I'm looking for anything aggressively in. Besides, if I find a little short-term pattern, it would be a 1, 2, 3 day bounce play. XLK also, and this is the technology, is shifting into sell mode again. I would not be surprised if we get a bounce in the market this week. Remember, just over 80% probability we are due for a bounce this week. Watching for a couple bounce plays. I mean, there could be something like an Amazon and Microsoft. I'll have to scan through. I've not done those scans yet, because I'm going to start watching for a bottoming position in the overall markets. But if I find some good entries, those would, again, be on short-term bounce plays with some of these stronger tech companies. Not looking to bottom pick some of these severely beat up tech companies that are more in precarious positions. So do please keep that in mind. And on a bounce, it has a long way still to go back up. You can see into the rotation zone on the daily and rotating back down. Now, this is a little mini double bottom here, so we will keep an eye to see if that does trigger, but it would need close above 148.41. It is interesting because it would be out of the way of the daily rotation zone. Now, where would that take us back in the bigger picture? Even the first target would just, it wouldn't necessarily tip us into buy mode again. So that's something to keep in mind, that these rallies, I'll be very picky in the technology sector with any rallies, and then watch for rollover plays again. XLI Industrial is in sell mode now. Okay, in sell mode. So not really looking for a lot with industrials also. You can see here this key support level right in here. Actually like it slightly higher, right about there. 98.44, 98.50 is now resistance. So even if it does get a rally, I'd be watching for a potential rollover play. And that's this level right here, and it's back into the daily rotation zone, and we don't even have any doubling pattern or anything else. Cycles are trying to turn up slightly, so there might be a small bounce in these, but this is not a sector I'd be gravitating to find plays in this kind of market environment, because even if it rallies back above this 98.50, your next key level is about 98.80 to 99 into the daily rotation zone. So it's a for me. XLY, consumer discretionary, has triggered last week into a sell signal, and you see this week just brutal. That is absolutely brutal. So should we continue? Again, I'm not looking for anything consumer discretionary. I think we're going to be heading into a recession a lot sooner than people think, and the consumer is tapped out in terms of savings rate again, but we could see a bounce. But in consumer discretionary, this is something I'm not even looking for a very strong bounce in. If we did get something, I'd be watching about 170 to about 172 area for a potential rollover play. And now you can see a quad bottom on the daily, which favors longer term a continuation pattern. And I wouldn't be surprised when we do roll over, even after a bounce, to see 155, then 148. XLP, consumer staples, pulling back. This is still a strong sector. I am very interested in finding stocks in, and especially if we do get a broad market bounce, you still might see a further pullback in some consumer staples because people rotate into some riskier assets. So then I will be shopping for some of these bigger plays. This is a very sloppy head and shoulders pattern. Very sloppy here, but we're gonna use it to gauge potential pullback levels. That's where it comes in handy. So that's how we're going to utilize this. So we're going to come there, down to the neckline, and project it from there. The neckline's broken. So now let's check this on the weekly chart to see. See, we could easily pull back to some of these lower levels, even the 62.5% level, which, you know, if I get a close below there, it favors a return to the 87.5 to 100% harmonic area. but we could easily come back down here and not get the close below the 62.5, which sets up for some great consumer staples buys. All right, so do keep that in mind. So I will be watching for consumer staples bottoming plays on a continued pullback, but I'm being patient with those plays and letting some really good setups unfold. It's nothing that I'm looking to run into on Monday and say I have to scoop up a ton of consumer staples to just round out my portfolio, especially since this sloppy head and shoulders did trigger on Friday. XLV. XLV, no sell signal yet. Healthcare, it's a substantial pullback and it is below the 62.5. So we should see that this doesn't preclude a potential bounce. We'll take a look at that daily, but longer term, we could still favor the return to about 126.50 to 124 area. So I am getting very, very hesitant. Even still, it's the long-term system is not triggered. You can see back below the 200, tried to hold it right here and rolling over. Now the rotation zone is negative. So I'm actually looking for any bounce plays. Unless it can really get above 136 area, I am not interested in it. Because now we have statistical probabilities that favor a retest of this low area. So bounces for me are to be sold. And if you are in healthcare stocks, there are some still stronger ones out there. I would just, again, can't give personal trading advice. However, from my perspective, it's time to raise stops on them more aggressively to lock in potential profits. So if they do pull back with the whole sector, you've locked in some profits, and then we can look for re-entries into those plays. So we're in very cautious mode, even though not long-term sell signal yet. It could trigger shortly, and that daily chart is ugly. XLB, Material Select Spider, still in bullish mode. Okay, nothing coming back here. No close below the 62.5 on that weekly basis. We got the rotation zone, and it's back below the 200 on the daily. So I'm really focused on if we do get a close about this 83, 87 area below that, then statistically it would favor a lower move. Now that lower move could potentially start to trigger a longer term sell signal. Although if I'm using some of the conservative rules with this, that would not really trigger until we broke down from there. So I will still be looking for some plays in the material select sector, but I am getting much pickier, and it has to be in outperformance mode at this point. XLC. This is just beat up, but it's getting very oversold. Again, this has been in sell mode since back in the middle of January. And this is what I'm talking about. See this little bounce we had in March up to the beginning of April, and then the major rollover play? These, when I talk, we could get bounces. Yes, you can get bounces, but don't get married to stuff. You know, this got a bounce and then a rollover play. Now, it does look like we might have a potential little bottoming pattern in here. Okay, and that would just take it to the daily rotation zone and back to this prior major support becoming resistance. So could there be, there's a couple communication stocks I'm watching for a short-term bounce. So that's what, if this does, especially if this sector does trigger, but this again, very short-term. Nothing to get married to. Nothing that I want to say, I'm just putting this away for 2 years in my portfolio. This is something, if it does trigger, I'm going to get in those couple stocks potentially, and then look to very aggressively raise stops and hit aggressive targets so I'm out of them quickly. But these targets would be 62.80 roughly, 63.39. That's a major target because that's a breakdown zone, and then 64.05. I really do want people to be careful in some of these sectors. Even once they get bounce plays, people think, oh, it's all fine and dandy. The lows are in. Let me just back up the truck, and then they get slaughtered again. XLU still in buy mode. This is pretty weak price action now. You can see the rotation zone is negative, we could easily see a bigger pullback. The major area I'm focusing on is about 69.14 on a closing basis, and then you have the 200 right below that. So I am being very cautious, even though it's in long-term buy mode. I'm in wait and see how it reacts down to the 62.5 level, unless I find an outstanding utility play, but there's nothing on my radar screen yet. We are back to this short-term potential support area. Remember, it's not a line in the sand, but we did close below that, which is not very strong. And even on our bounce up, we have against the daily rotation zone, so we watch for another leg lower. And this was a horizontal channel. You could almost map it out with your double targets, and you see they have already been hit, and then it even continued lower. So not liking that at all. Short term, going to look at it longer term as we hit some of these key lower levels. Xrt Transportation has been in sell mode, retesting these lows from back in February. Again, not very bullish on here. It came out of this flag pattern also and broke down. The only thing that interests me on a longer term basis now is if we do get this potential double bottom trigger. But that's back at 81.93, so we need a very substantial rally, and that could also pop us back eventually into buy mode. So until that happens, it would only be short-term, very poppy plays with with resistance even overhead coming into the daily rotation zone you see right here, and about 74.30 area. So even on a rotation up there, I'd watch for rotation back down. And if we do break from these lows, not interested at all in transportation. Sorry, that was XRT, which was sorry, I messed that up. This was a retail ETF. So everything I just said with all the levels stays true. I just mixed up. I was thinking I was on transportation, but I was on retail. Not interested in stuff retail related unless we get back above that 81.93 level and trigger that bottoming pattern. Now I'm into transportation. Transportation also in sell mode. Trying to put in a little sloppy bottom here. This is way too sloppy for a double bottom. Only interesting, we'll look to transportation if it can pop above about 251.50 for a short-term play. But it is in sell mode, trying to hold on to this key support, but if we break below 239.05, not interested at all. Commodities, again, still in bullish mode. We'll see if this strongly rotates up. This is going to be a triple top back up here, which favors a continuation play. I'm slightly getting pickier with commodities, but there are still good commodity plays out there. So still holding up at this 25% harmonic. I get a little concerned and start watching for the bigger pullback if we break below the 50 on the daily, roughly coming in at 26. But until that happens, I'm in full-blown bullish mode. And commodities and agriculture, the subset of that, even with this little pullback, still in very bullish mode. I get a little more concerned and we'll watch for the bigger pullback should we close below the 50 EMA on the daily, coming in about 21.85. Then I'd watch for the next level down would be about 21.50 and then 21.08. So I'm still watching. These are still your commodity plays are overbought. They are still in strong buy modes. I will be watching for bottoming plays, especially if they do hold their 50 EMA. That's what I have for everyone. Hope everyone has a great rest of their weekend, or if you're watching this at the beginning of the week, a great trading week. If you find this information helpful, please let me know in the comments. And this is just to give you an idea of my thoughts on the overall sectors and what I'm really focused on for the coming trading week. Please come back each week if you find this content helpful and view the videos, and I will talk to everyone later. Oh, by the way, I just noticed, so this is still a potential double. Sorry, I didn't call that out. It does look sloppy. Let's just use these. This is a strong bullish mode. So above about 22.36, you could see a retest of these highs. So I will keep an eye on that in DBA. And with that, we will call it a wrap, and I'll talk to everyone later. Bye for now.